turn on Do Not Disturb. Boom, boom, boom. Okay. Let's go to YouTube. Your current live stream. I'll hit the thumbs up. I got my chat window up. I will remember last day for the TrendSpider Black Friday sale. Get monthly or yearly subscriptions and access to my rhythm. Send. Boom. Now how do I, can I pin this? Let's see. Pin message. Boom. Message pinned. Okay. Anybody else having problems with Roku or streaming services? Do I have NBC? There's NBC. Let's see, loading. I can't watch it CNBC. I kind of feel naked in here without it, but for some reason, I use a Cox subscription, and I have not been able to, on Apple TVs, watch any of the NBC, stream, I should say, any of the NBC platforms. So I have people texting me about the Ticketmaster fiasco. Do I have any Swifties in the house? Any Swifties here? Let me see. Oh, we're going to quit Active Trader Pro. Let's force quit. Force quit. Force quit. And we'll start it up again. Okay. Bum, 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 bum. And I guess, morning, Zephyr. It is cold in my house. It is currently 31 degrees outside. It was 28 degrees when I woke up. I got my little beanie on. And I guess CNBC's not going to stream. And I don't know if it's because I'm using a password for Cox Communications. But I couldn't, even on Apple TV, it even said, we're sorry, your provider is not available. So I tried to switch to my parents' DirecTV account, and I couldn't get that either. Okay, it's not going to let me do that. 216. Don't ask me again. Okay. Let's see. Does this update? No, it hasn't updated. Hopefully this one updates. I'm still getting all set up. So, let me put you down there. And let's test the Active Trader Pro. We's got it. What I wanted to, I think last night I said to somebody, hey, Boyle's over 40. Sell it. It's under 40 this morning. It's at 39. We'll take a look at this. Devin, you don't get mad at yourself. Yeah. I'll add Google to my list. GOG for Zephin. We'll take a look at it. Cause let's see, where is Google? And freaking CNBC is not coming up. No live streams from anything. Hey, shit. Do I have to turn on CNN or the local channel? It's just not loading. 99.14 is where GOOG is. I'm kicking myself for not buying NVIDIA, SOXL, all of that stuff. Let me move this over here. And then I've got to start the podcast on here. I'm a little out of sorts. Let's see if CNN works. See if any live streaming works. Let's see if it's a Cox problem or if it's a NBC problem. The video is unavailable right now. It's a Cox problem. Headline news. Cox lost their link to all of the... I think there's a central authorization. What do I have that's live? Do I just want to watch WSB Channel 2? I like something streaming. Local news replay. I can watch local news. I'll take a look. I tend to agree with you, Christian. In this market, but I don't know. It's hit or miss. Let me see if my headphones work. Good morning. Good morning. It is freezing freaking cold right now. Good morning. I probably should turn the volume up. No biggie. Sorry you guys get to see this. I had oatmeal for breakfast. Google I like. I still like Google. I mean, just from the multiple perspective, I mean, shit. If Apple were to come down to Google's multiple, I might actually think about buying even more. I'll just go back to Safari. It was oatmeal this morning. Full disclosure. Why? Oh, wow. Holy crap. It's the one that keeps on giving. American Eagle Outfitters. It's got tons of freaking gaps. It's trading at 13.11, which is up here. I'll bring this one up. Whoa. I'm just going to say whoa. I do have to talk about, I got an email from Brent. Indicators, especially one. Can you break down SOXX again? For Brent. And Brent, hopefully you're on. I got your email. I'll reply to you. Answer's probably no, Brent, but I'd be happy to help. My mom keeps telling me, guys, yeah, I'm 50 fucking years old, 52, and you still listen to your mom at 52. If you're lucky enough to have your mom around at 52, you still listen to her. And she's like, what are you telling these people? You are not qualified to tell anybody anything. Why are you doing this? Blah, blah, blah. And I liken it to a lot of my entrepreneurial friends. I came from probably an upper middle class background. We were poorer than most people in our community, but I don't think that, more than Mike, I don't think people really realized how poor we were. But my parents, we were not poor. We had a roof over our heads. We had cars. We had, my dad worked like 2 jobs, but my mom did go to Princeton. When we were 7, she was one of the first mothers of children. By the way, it was 1977, which is not that long ago. They did not allow women in Princeton for quite a long time, let alone mothers. I haven't started, Mike. I'm getting a late start, but we were a little poorer than most, I think, but I didn't know it. But a lot of my entrepreneurial friends, and I had a lot of friends who went into the arts and didn't take the quote-unquote safe route. I didn't take the safe route. I wanted to be a musician. I took 4 years off between high school and college, and parents were worried. Oh, my God, he's throwing his life away. I remember my friend Chris was writing movies, and his parents were like, he's going to fail. Great writer, but oh, my God, we're so worried about him. My friend Jim was doing music, poor, sleeping on the floor of warehouses. Oh, my God, he's going to be so poor. Jim, by the way, is the lead singer of LCD Sound System. Chris was the writer of the movie Usual Suspects. I think Ethan Hawke. I grew up with him, and I remember his mother was super, just hippie. It was like, Ethan, go and explore, Europe at 15. Put a backpack on. Just go to Europe for the summer. You don't have money. We don't have any money. Don't worry about it. You'll figure it out. He I don't know if he's the richest of all of us, but he's wealthy. But yeah. So my parents are very safe and conservative, and even the friends that I have now, there are a lot of their parents who don't understand. And it was funny because I think I remember Sam and Sean on My First Millions podcast talking about their parents when they said they were going to sell their company, and Sam's mom was like, "What are you going to do about health insurance?" Let's do some scans. Okay, I'm going to go into the market scanner. AEO, by the way, God, that's my biggest gain. No, CrowdStrike's my biggest gainer. Wow, CrowdStrike's at 5%. Anybody go in on Palo Alto? Because guess what, newbies? Palo Alto's up 8.5%. It's at 169. It is right up against that 200-day. And Mike, I am late is what a woman says after a rough night. Not what you say coming to my podcast. Oxy. It looks like energy's down. I was reading that oil was up. Where's UCO? UCO is down. Let's look at... boy. Michelle, aren't we glad we got into... I don't know if Michelle's here. Mike, if I showed you my performance from January until now, nobody would write nice things about me. You guys wouldn't tune in. The fuck's he talking about? Freaking trend lines and shit. He doesn't know what he's talking about. He lost. Hold on. I will tell you what I've lost. And it's because, guys, remember, buy and hold. I mean, buy and hold is what makes you rich. Buy and hold, your portfolio doesn't matter. What you're trying to do is just beat the indices. Because if you beat the indices, if you beat the S&P in your overall portfolio, you're doing better. If you don't, yeah, Mike has Robinhood too. I forgot about that. Thanks for pointing that out, Zepin. But if you beat the indices, if you beat the S&P, if you don't beat the S&P, the large majority of your portfolio should just be in SPY or VOO or one of those. It shouldn't be in single stocks because obviously you just aren't very good at single stock picking. And that's not a shot at you. It's not a shortcoming. It is really, it's just reality. I mean, the majority of people, and it's not just people. It's just, I got lucky. I picked Apple. I mean, if you pick a stock where it's good, then your portfolio can be there. But, constructing that portfolio, I am never going to advise any of you on, hey, this is how your portfolio should look. If anybody wants that advice, I'm running for the hills. Hell no. Because I'm not a good portfolio. Find your financial advisor. I got a financial advisor at Fidelity, Stuart. Guy's great. If you guys want, get over to Fidelity, I'll send me your email. I'll send it over to Stuart. He'll contact you, big or small. Don't worry about it. He prefers big though, big portfolio. Yeah, I think he's compensated on how much money he brings in. So, yeah, if anybody wants it, Stuart, I love him. He's great. He's fantastic. Oh, but Michelle, hopefully you're on. Look at Target, 162. I said yesterday to somebody, I forget, I think it's chasing this 176 because we're closing above that 200-day now. What did it close at? Let me see. Did it close? It closed at 162. It's trading at 162. But 162, are we above that? We are above that one. The 200 days at 159. We closed above the 200 day. So my guess is, again, it's Friday. Don't buy in on a Friday. And look at the MACD. It's kind of crossing down. The RSI is moving up a little bit. I gotta get another indicator on here. Where are my stochastics? If you don't know stochastics, I have no fucking clue what these numbers mean, but they're kind of standard 14.3, 14.3, 80, 20. This mixes the MACD and the RSI. I love stochastics. They move faster than the MACD. I'll look at forward. I don't have a lot for today. So, other than Jim Cramer's railing on the crypto community on Twitter, let's go see. He's saying people are too confident. You're too confident. Look at Elon, man. Elon trolling Twitter. Fucking Trevor Milton. Sold half my Bitcoin at 52K. You sold an appreciating asset for a depreciating asset while taking a tax hit along the way. Bitcoin isn't an investment. It is the reserve currency. Pomp. He was on yesterday. Pomp was on yesterday. Tom's wife is half Chinese. Let's go to Jim Cramer. Has he blocked me yet? No. I'm not that important. By the way, his pinned is his own agave. If this doesn't scream, I'm in it for the money. Digital finance people who keep saying we are safe in crypto, here's an idea. Stop lying. Douche. You're bullish. Let's say. Quote. I'm bullish. Bitcoin. I think everything's up pre-market, Mike. I'm going to go back to scans. Let's go back to market scanner. I'm seeing shit. My portfolio, the only thing that's down is energy. It's down fairly. Baba's down, but the only reason Baba's down is because it's been in a killer. BP had a cross up, but I have a feeling this one. Delic. I want to look at XLE. Ford for Mike. And let's look at XLE. At one point, I'm going to actually put the indexes into a group in TrendSpider so I can trend all the indexes. There's nothing, by the way, that brokerage holdings, that's what I just did. Nothing crossed up. VRTX. Look at that ascending triangle. It auto understood ascending triangle. That's bullish, by the way. And look at how it's using the 200 day. This is a pharmaceutical company. VRTX. I think I put this in because it actually was a pretty good. They have a PE of 24, but they're in 41% year to date. I'm going to put that one in. I had it in my to own this earlier in the year. I put it in my list earlier in the year because, I mean, look at the earlier in the year, you can see 288, 282, 269, and look at where it was trading. I mean, it was down, in January, it was still at 230. So it's 309. July 13th, 365 is the last call. But I like that one. I had it in my list. I just have forgotten about it. Okay. VRTX, then we're going to go to all the ARC folding holdings. PTNR, Partner Communications. Signify. Look at Signify Health. Getting the gap up here after announcements that they're going to buy or they're being bought. And just hanging out there at 28. Let's see, Michael Burry just tweeted. Up the irons. What you have to know about Michael Burry, he is, what's his name from Morgan Stanley? Mike something. They're always rooting for the downside. Not that they're rooting for the downside, just they're always on the downside. Always. Oh. Dan's brother's in the hospital, so guys, send good vibes out to Dan, CEO of TrendSpider. I love. By the way, if you want some fun, Caitlin's awesome. She's actually not, she understands stuff. But she trolls Twitter boys. Elon's a legend. By the way, I am such a fan of AOC. Don't agree with her politically a lot, but love her. Love her. Just such a fan. Such a fan. And listen, as I go to work at the Miss America pageant next month, let's just say, AOC on a 1 to 10 scale, she's a congressional 15, 20 on a 1 to 10 scale. She's awesome. I'm such a fan. Have I said that already? Okay. ARC Holdings. I don't. VRTX is the only one that I'm going to do on ARC Holdings. Let's look at Dow 30, NASDAQ 100. Yeah, Michael Burry's great. I mean, listen, Michael Burry, super smart guy. I don't down him, but just understand, take his comments with a grain of salt. It's kind of like Tom Lee. Tom Lee's been bullish this entire year. What are we down? 20, 25%? It's going to bounce. It's going to bounce. They're always right at certain points in time. But, and you can, nobody's perfect. Let's go to S&P 100. Oh, where's my water? Nothing in the S&P 100. I'm going to go to healthcare. Because I do think we need to start looking at some safety and healthcare. If I recognize any of these, that's the problem. Most of it's biopharma. And I'm not good in this sector whatsoever. Boy, there's a beaten down stock that has a chance. Let's see, Airs. Let's see what they do. Air Sculpt Technology, healthcare, medical care facilities, not making money. Forward PE is only 10, down 80% this year. $4 price target. Provides body contouring. Guys, let's be honest. Who doesn't need body contouring? Why this is down, I don't know. But we all need body contouring. Look at that. They made 1 cent and then they lost 13 cents per share here. But boy, that's been beaten down. It got over the 200-day, went under the 200-day. I'd love to say this is a... If you can find a stock that's making money that looks like this, that's what you want to throw your money into. Let's look. VRTX. I think I'm going to start the podcast. What else do I have to look at? Hold on. Were you not here yesterday? I should put that in. WW. Sedge. I'm beating myself up over not noticing solar sooner. Because, look, Sedge is a stock that I've traded many, many times. 203, you're at 300. I mean, it's a legendary run. End phase is the big one. This is a big solar one. See the ascending triangle? It's getting into that wedge. Hasn't broken out of that wedge. Getting into that wedge. It's bullish. Bullish. I'm going to add that in. And end phase. Solar is still bullish. I got enough. You know what I'm going to do? Hold on. Where's my energy play? We're going to look at these. I want to look at Cleveland Cliffs too. I got a lot to freaking look at. See, I come on here, I got nothing. At WWC, you got to rewatch this stuff. You got to watch my 4-hour live stream that I do. I need to go over how to use the podcast because I think you guys get it, but I think new people, you have to, sorry, putting that over there. In my mind, if you're going to miss the YouTube live, and I don't blame you, my ass ain't sitting around watching a YouTube live guy. But if you're going to miss the YouTube live, just tune in and play the podcast on like 3 times fast because I do a lot of You missed the humor, but I sound like Alvin and the Chipmunks. We're losing a little bit, but on the NASDAQ, it looks like, at least. Okay, I'm gonna start this because I got a lot to go over. Let me see if CNBC works now. Did Cox get their shit together? Boom, 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 boom. No, doesn't look like it. I can't even watch the preview. I I guess I could sign out of Cox and sign into my parents, but we'll just go back to the live. Live of that. Okay. Good morning, everybody. We got 15 people watching. I'm going to start the podcast now. I'm watching traffic and weather. WSB2 News. Good morning. It's Friday, November 18th. I had some coffee, no caffeine, caffeine free, because I'm not a big caffeine guy. And speaking of drinks, has anyone heard FIFA and Qatar? Qatar just announced they will not be selling alcohol at the World Cup starting Sunday. Yeah, the World Cup starts Sunday. And Qatar, who, if you haven't seen it, Johnny Harris on YouTube, who's an investigative reporter, everything Johnny Harris reports on is dramatic, overly dramatic on YouTube. I think his videos are fantastic. They're thought-provoking. What comes out of it, I don't know. I mean, he's got a great team of editors, great team of researchers. But just Google Johnny Harris and look up his most recent video on how Qatar won the World Cup, the bidding for the World Cup, I should say, and how much money they spent. And now, 48 hours before the start of the World Cup, they announced, we're not going to sell alcohol. Well, remember, some major sponsors are Budweiser and the beer companies. So it'll be interesting to see. But if the English fans and the European fans and most likely a lot of the people that go there, they're going to be pissed. I have a personal Qatar story in that I met the Prince of Economic Development in Kansas City last year at a CONCACAF Gold Cup event. And I told him, I said, you guys are BSing. There is no way you have an outdoor stadium in a desert that can maintain a 73-degree temperature. And he's like, we engineered it. It's perfect. You're welcome to come over. Never heard from him again. But, I was up in his box. But Qatar banning beer at the beer at the World Cup. FIFA, what will they do about it? We'll see what happens, but it's just, it's whatever. Twitter is a mess. Elon posted a internal news memo or something saying, hey, shit or get off the pot to all of his employees. A lot of people didn't like it. They're leaving. AOC is tweeting her support for the workers. And Elon saying, thank you for tweeting your support for the workers. We appreciate you using the platform. He closed the offices, denied badge access to everybody until Monday. Sounds like they were afraid of people actually sabotaging. So it's just a mess. What does that do for Tesla stock? Who knows? I mean, let's look at Tesla stock. I'm on YouTube Live. And before I forget, just so everybody knows, it's the last day for the Black Friday sale for TrendSpider. So if you're interested, the links is below. It's in my link tree. Go and do it. You can get access to my algorithm. I've helped a bunch of people get it. But so far they're liking it. So far people say, it works well. But let's look at Twitter. I mean, Twitter just has no confirmation. Look at it. It's below that 9-day. It's within the Bollinger Bands. The Bollinger Bands are kind of syncing up. You're in it with the algorithm. The algorithm has you a buy here at 195. You're trading at 183. Pre-market, it's at 185. As far as recent volume levels, you can see the 188 to 193 has a pretty decent volume level. Nothing crazy. But if we bring the volume level back to the times where it was trading in this range, and I'm going to try and do this. Now, we got to go back to a daily. I can't even get back to the days when it was in this range. So you've made a complete round trip, by the way, all the way back to September 2021 on this stock. I want to say June. Yeah, let's see. Yeah. about June of 2021. You just don't have volume levels there. If you go back to the most recent gap that hasn't been filled that we've been talking about, back here between 135 and 145, you still don't have any real volume support below this. Doesn't mean that it won't go down there. It's going to build some additional volume. But if we were looking to a magnet, and we were looking at my algorithm, remember the algorithm has a gap up here at about 220 or so, and we'll look at it. But there, you've got a volume shelf right about there too. So I think people are holding on to this one. I don't think there's a lot of sales. I think Elon is the major seller of this. But, him running Twitter doesn't do Tesla stock any good. See that gap up there between 258 and 262? That's the gap I was talking about, not at 220. But down here at about 248, you've covered that gap on the way down. But, yeah. It's got this gap to cover on the way up, but it's above the 200-day. It gets the further downside you get it, the less likely it is to come back anytime soon. So there's your news update. Let's go to, by the way, with FIFA, DraftKings is an interesting play. Because this one has been on a run. The algorithm has you in at 1471. You're trading at 1491. In pre-market, you're up 3% to 1547. Now, it is clear. Here's what's clear. You're using this 200-day as a resistance level. Again, you're at 1547. The 200-day looks like it's about 1530, so you're just above that. If we were to close above the 200-day, I think you're ready to get taken off. And look at the last time we went above the 200-day and we closed the 200-day. You went from about $15 all the way up to $21. So, and you stayed there, and then you used the 200-day as a support level. You're in the NFL season. You got the World Cup, the largest thing coming up. I think you've got an opportunity here in DraftKings. But when we go over here, the problem with DraftKings is they're not making money. So if you want a stock that's actually making money, let's look at Sand, Sands Casino, Las Vegas Sands. There it is. LVS. They're not making money. I think they're losing money, but they're up 17% year to date. It's a great company. Penn National, Penn Entertainment. This is one that is making money. They're down 29% year to date. They've got a double bottom here at about 26, 36. If you want to go to MGM, you can look at MGM. I mean, all of these casinos, if you're looking at casinos, just DraftKings is the one that I chose. I think they're growing the most, but it's the cost of each customer. It's about, I think, $1,500, $2,000 that they actually spend to bring somebody new on the platform. Now, if you get a degenerate like you guys on the platform, DraftKings is going to make a lot of money. So, but I do think that DraftKings, I sit and hold, and I hold at a $41 price point. Remember, I'm not perfect. I've ridden this one all the way down. I shouldn't have, but I rode it all the way down. I'm still holding. It's a long term. I may get out of it so that 30 days later I can get back into it because I do believe in this platform. If you haven't used any of the online gambling tools to gamble on football, it's unbelievable. It really is good. They suck you in. I do $5, $10 bets. I don't do anything crazy, but I really, really do like it. Boyle is one. It's under 40 again. And I was mentioning yesterday to somebody, hey, under 40, buy it all day long. Over 40, you should probably sell it. The algorithm has us buy in at 42.23. Let's go over to Active Trader Pro, and we'll look at Boyle here. I think you're at 38. Yeah, 38.52 is where you're at. It's got no confirmation right now. The current stick is just, it's out of control because it usually is when I log in and change things. But Boyle right now is at 38.42. It's Friday. I don't know that you necessarily buy and hold this one. But if you're day trading, BOIL is one that you could absolutely day trade. In the opposite, KOLD. This one is up in pre-market. So you can trade these against each other. The volumes are there. The volumes are big. 90-day volume on KOLD is 11 million shares. 10-day volume is 9.5 million shares. So you're at 1687 on KOLD. You closed at 1546. But the buy-in is at BOIL at 42. KOLD, let's see if you have a buy-in on the algorithm here. You got out with a 16% loss on KOLD. But, look, KOLD is going to use that 200-day. It's going to be brought back up to that 200-day. The 9, everything's kind of crossing up. It's just messy. Day trade this one. But again, it's Friday. News alert. Jim Cramer is railing on crypto. We're bullish. Jim Cramer said, let me quote him specifically. I put it on my profile. Jim Cramer says, digital finance people keep saying we are safe in crypto. Here's an idea. Stop lying. Somebody should tell Jim Cramer to stop lying. The guy manipulated markets as a hedge fund manager. The guy's just a douche. But we are bullish on crypto. What does that mean? That means GBTC, the Greystone fund. You don't have a cross up here, but you're damn close. Again, it's Friday. I wouldn't buy into this one. You don't know. A lot of these, if you want to buy crypto, buy the coins. Buy them on a place like Coinbase, which is regulated. You won't lose your money. Coinbase will be regulated. I would say hold it in cold storage, but I think you're better off just, kind of trading the coins, if you will. But Bitcoin, we're bullish on this one. Ethereum, ETHE. That is one that I own too. It's up 2% in the pre-market. None of these have a great chart that tells me, oh my God, they're ready to take off. And with all of the shit that's happening with FTX, it's a little dangerous. But with Jim Cramer tweeting that he wants people to stop lying and he's bearish on crypto, we're bullish. That's all that means. Let's see. Somebody, I think it was, somebody on Instagram. I think it was Corey. I think it's Corey on Instagram. Asked me to go over China. And specifically, he owns the FXI. Why is it doing FXO? I just can't type. FXI is large cap China. It's an ETF. It's been going good, really well. I mean, you had a buy-in here at 21. You're up at 26. You got gaps all over the place. Here's my thoughts on China. I hold BABA. I think the U.S., it is clear that the U.S. is probably heading towards a recession. How deep a recession? Don't know. Have no idea. But the reality of China is it has been beaten down. Their COVID policy has been closing cities the like of the size of Texas have been shut down. I don't know that necessarily stops. But from a long-term perspective, I think, in my particular opinion, the reason I still hold BABA and the reason I would still buy BABA is because I do think that at some point in time, these guys open up. And when they open up, you're going to start to see a fairly big boom on these stocks. If the U.S. goes into a recession, guess where we're going to get cheap shit from? China. And you're going to start to see that boom of cheap labor, cheap products start to come back. Right now, you've got a fairly good trade war with tariffs and things of that sort. I think you'll start to see the two countries work a little bit better. Biden even had his first face-to-face with Xi. They said, hey, there is no threat to Taiwan directly. We don't want any conflict. We will compete against each other, but there is no direct conflict between our countries right now. So your FXI, your BABA, your KWEB, which is another ETF. This is the largest Chinese ETF. It just looks like FXI. It's the same kind of thing, just huge gaps and jumps. Pretty messy. You look at JD.com. This is similar to an Amazon kind of situation, I think, similar to Google. But you've got it way up here above the 200-day at 57.52. It has moved tremendously. Pinduoduo, which is another big Chinese company. Same thing. You got to buy here at 54. You're at $70 right now. Their earnings are coming up on November 28th. I don't know that I'd necessarily get into this one, but if they announce their earnings are up and China's opening up, this one's going to take off. So if you're young enough, I don't think that you throw 100% of your portfolio in here, because just as much as Pinduoduo is at 70, it very well could come back to the 40s like it was here back in August. August wasn't that far away from here. It's not like China has changed a lot. All that needs to happen is for the Chinese government to say, we don't like Pinduoduo. They did something against us. And boom, it's not like America. These guys can completely interfere in company operations. And then you're left holding the bag. So if you don't want single company exposure, buy KWeb, buy FXI. But I do think you have an opportunity there to sit and wait and just enjoy. I mean, look at the last few. Look at in Pinduoduo, May, $41.73. Got out with a 35% gain. Here in August, get in at 48. You get out at about 70, 40% gain. Here, 54.31. Here in November, you could get out with a 40% gain. So you've had this run. I think Pinduoduo in particular, by the way, you lose 60% with the algorithm. You lose 50% with buying and holding. Your average, you win. You have 33%. 33 positions, you win 24% of the time. But those 24% that you win, it's an average of 16% that you've gained. Your average loss, though, is 7%. So maybe have a stop loss for 5%, and then you can try and get back in. If you guys signed up for TrendSpider, maybe put in a 5% loss when you buy it, rather than waiting for the average of 7% down, and you just kind of put in the sale. So I do think that there's opportunities in China. It's not hands-off like it has been. So I hope that makes sense. Christopher from Australia, who lived in Brisbane, by the way, now lives in Melbourne. CALX, Calix. I don't even know what this company does. I'm going to have to look it up. He's been in this one. He's made quite a bit of money, and he's done well. I see the button hook. Remember, the algorithm has you out at about 68. You're trading at 65. And it's the RSI is in no man's land. The MACD is kind of right on the oscillator there. Let's see what these guys do. CLA, Calix. Is it oil? Technology, software. Wow. It's expensive. PE is 92. The forward PE is 54. There is no dividend to speak of, but they are only down 18%, which isn't bad compared to the S&P. April, Rosenblatt initiated coverage, $60 price target. You've blown past that. You're at 65. So the analysts mean nothing, and they're just not covering it enough. Calix, together with its subsidiary of cloud and software platforms. Wow, a cloud company that's only 17% down. That's not bad at all. It looks positive. I would tell you that the PE looks a little bit difficult to justify. Their earnings per share this year is expected to go up 550%. That's why you're seeing that explosive growth, because you're in the fourth quarter. And again, they're expected to be 550%. So they've grown it. The problem with earnings per share next year is only expected to go up 15%. Earnings per share for the next 5 years, only expected 20%. Earnings per share past 5 years, 52%. So they're expecting some pretty heavy growth. I would say if you've made money on this one,
I might take some off the table unless for some reason you have some other knowledge. Because again, remember, my goal here is to look at the technicals on the chart, which don't necessarily tell us a long-term story in this market. This market is, the charts will tell you a specific on a short term, but I think for the long term, if we're heading into a recession, cloud spending gets pulled back. Is Calix one of those that maybe that their folks start to pull it back? You can see 35 cents per share right here in October. Then it goes down to 26. Then it goes to 22. It stays at 22. And then boom, last quarter you have 34. So maybe the next quarter is a big quarter as well. And then maybe in the summer, you kind of shrink down. Let's see. It's a newer company. I don't think it's, no, I'm sorry. The 200-day is, you can see all the way up until December of 2021, it was well above the 200-day. You've come back to well above the 200-day. So as far as a growth company, I think you've nailed it on this one from a long-term perspective. You haven't even touched the 50-day. You went below the 50-day in February, and then you crossed above the 50-day in August on the weekly. You still have confirmation on the weekly. I don't want to say that it's over and done with, but you are close to the 52-week highs. You're 19%. Your 52-week high is $80.95. So I think you still have some room to run. I would just be careful, though, Chris. Honestly, I'd be a little bit careful with this one. It's run, but who knows? This could be your Apple. So I think it's more of a personal decision. I commend you because it's a great one to look at and to see. Zephan wanted me to look at Google, and he wishes he would have bought more Google at 83. I think everybody wishes they would have bought more Google at 83. It's at 98 right now. I own GOOGL, which is at $98 down, slightly in pre-market. You're getting that button hook. If it's a long-term hold, keep holding it because here, let's go to the weekly to look at long-term. You're just right about the 200-day on long-term. The last time this one touched the 200-day was COVID, and then look at what it did afterwards. So I tend to think that we are in a quote-unquote COVID-style recession. If you believe that we will quickly get out of it, that's what COVID was. Make no mistake, when the government shut the world down, this was a recession. It just so happened that we spent our way out of that recession by providing tons of money. This recession is going to be a little bit different. This recession probably will be slightly longer, but I still do think that you're growing on this trajectory where it's out above the 200-day. And the 200-day is for Google, GOOG, it's right about 94 on the weekly chart. Look at how low that RSI is. Look at how low that MACD is. You're going to cross up. I think from a long-term perspective, I like this one. From a short-term perspective, I think you're getting that button hook. So you have to decide, okay, is this a long-term play or is this a short-term play? See that button hook right there? You're starting. I have been wrong before on these button hooks, though. So I at least hold through the weekend. There's no reason to sell it today. There's nothing that tells me, hey, we've got to get out of this one. I wanted to bring up my own personal sad story, but happy story for anybody that followed along or got in. American Eagle Outfitters, who wear, only douchebags wear their clothes, who over perfume and wear large fake Rolex watches. This had a buy-in on October 18th at $10.26. You've gapped your way up here. In pre-market, it is up 5% at $13.20. I guess the market is open now. Actually, right now it's not even pre-market. But you've gapped up here. $13.19 is where you're trading. Crazy good trade. What, 30% almost? The MACD is crossing up again on this one, and the RSI is at 66. Earnings are coming out next week, November 21st. I don't know why in the world anyone would announce the week of Thanksgiving because the market will be dead. Absolutely freaking dead. I don't understand why you do it. But American Eagle Outfitters, they're fighting the trend. They're spraying themselves with Axe body spray and saying, F you guys. F the world. I don't care if anybody, with allergies is sneezing. I'm bathing in Axe body spray right now. And that's what American Eagle Outfitters is. So, I hold this stock. I hold it at about $20. This was Jim Cramer. During the supply chain days, they have contracts with cotton companies. These guys are going up. And that was like on a Thursday or a Friday. And I remember thinking, I think it was a Thursday. Let me put $5-10 grand into this one. Well, I'm down like 60% on this one. I bathed in Axe body spray and took the brunt for it. Brent wants me to explain SOXS. So here's what SOXS is. This is the semiconductor. If you've lost money in SOXS, it is because you just haven't read the charts or the tea leaves. The semiconductor space has been beaten beyond belief. And you look at this chart, it had in the algorithm, even though you got a buy-in here at 67.17, you could see the RSI was kind of in no man's land. The MACD was kind of crossing up, but it was under the oscillator. Probably would have given some bullish sentiment, but two candles later, it gets you out with a 12% loss. And hopefully you got out because there was no future in this one whatsoever. It gapped down. You're down at 34.39 right now. The RSI is at 32. I think this could be the time to get into this one. It's Friday. Do not buy this. Here's the thing you have to know about these 3-time bear or bull ETFs. They are levered using options. These are not something you play with. These are not something you buy and hold until forever. You get a profit in this one, you absolutely take your profit. You can day trade this one. You can swing trade. My personal belief is if you've been in it more than a week, you probably should just take your profits and get out. In this market, these things turn quickly. Your average win is 20% in my algorithm. Your average win. You've got to pick the winners. In this particular, my personal thinking is if it's under the 200-day, you can buy it. Under the 200-day, you can buy it. Now, it doesn't always jive because look, if we bring this one back here, I guess I'm only going back to September of 2021. But if you look at the algorithm here, if you would have bought here, under the 200-day, you would have lost. If you bought here under the 200-day, you would have lost. It doesn't always work, but the closer you are to the 200-day, the more likely you're going over the 200-day. And that's been a fairly good trend to have in SOXL. SOXS. SOXL is the long version. Remember, SOXS is if the semiconductors like Qualcomm, AMD, Intel, NVIDIA, if they are going down, Micron, they're all semiconductors. If they are going down, then SOXS will go up. If all of those companies are going up, then SOXL is your play. But it's triple levered. This is going to move fast. And so you want to make sure that you're either in it or out of it very quickly. If you're in it, you got to make sure you watch the charts and you look at it, because when you're winning one day and you're up 30%, you could easily lose that entire 30% the next day because they're triple levered. Any kind of news that comes out, these things move. And they are decaying assets, so you don't want to hold on to them like you're investing in them. Right now, SOXL has a pretty good run going. The algorithm had you buy in at $9.27. There was a $7.27 buy here on October 19th. It got you out with a 19% gain. I wouldn't have gotten out. You had that little, I probably would have gotten out here. And honest to God, when this next one came up at $9.27 on November 8th, buy in and boom, you shot up. That was a great trade. You had this break up and remember, if you were on YouTube Live back a couple of days ago, I set this alert on TrendSpider. Hey, when it breaks through, it didn't close above there. So I think you're using this 200-day as a resistance level right now. SOXL is trading at 1263. I don't think you get up there. I wouldn't buy either one of these. It's Friday. But hopefully that makes sense, Brent. You just want to make sure that you're looking at these things. I don't think you hold these more than a couple of days unless you have absolute confirmation on these candles. Like, look at those candles right there, just from earlier this week. They're outside the top of the Bollinger Band. You absolutely have confirmation there that it's going somewhere, and it's going up. But outside of that, once you get towards this 9-day and you get below it, look at taking profits, because you can always buy back in. So that's my guidance for that one. Mike wants me to look at Ford. Ford was running in the pre-market. What's it up? Does it have a red? It's got a red candle. I think the market's, let's see, the market's right now, the NASDAQ is up 0.35, Dow's up 0.5, and the S&P's up 0.5. The VIX is down 1.8%. It's down at 23. Let's look at Ford. Ford has been a hype rally. You got a buy-in here on October 4th. It gapped kind of down, up. I mean, it's messy. There's a gap here between 1340 and 1353 that hasn't been filled. You are up at 1398. It's a Friday. Don't buy it. I would say, look, see that button hook right there? I think you're more likely looking at it going back down and filling this at 13 than you are it closing above 15. I mean, 15's way up here. It could get into the 14s today, but who knows what the market's. It's Friday. Don't buy into it. Energy is down, but I want to show you at the index. XLE is the sector spider. And you can clearly see, remember I talk about the button hook. Well, 7202 on September 30th was the buy-in. And on one of these sector spiders, when it goes from 72 to 90, you got to have some pullback. And so you're seeing today, there's that pullback. And when we look at the MACD, it's already crossed under. So see how it's crossed under, kind of got back there, crossed under. The algorithm doesn't get you out because of the moving averages. The moving averages are still moving in a positive direction. Once there's a crossover, you'll see my algorithm get you out. It's close to getting you out, which again means that you're looking at this volume shelf. Let's pull this back to June. We hit highs in June, and we're at those highs that we were in June. So where are most people holding? Most people are holding at the 82 level. You're at $90 right now. There's going to be a magnet that probably brings this down towards 82. What can change that? A catalyst. Remember, December 5th is the EU embargo and sanctions against Russian oil. If we go into some type of, if Europe says, hey, we're going to go into peace talks with Russia, we're heading into a winter, we want peace talks, you could see this pull back to the 82 level because, Europe is in a energy crisis. I mean, make no mistake about it. They're in an energy crisis. So I think you're looking at energy. So if we look at energy, let's look at some of my holdings. Devon, you're going to see the same kind of chart on this one. See, there's a button hook right here. It got you back in at 72. It's at 67 right now. Probably will get you out. There's a gap here that hasn't been covered between 62 and 61. I'm still holding this one. You have a dividend X date coming up on December 9th. I'm just holding it. I mean, I think these volume shelves up here between 68 and 73, at some point you're getting back there. Can I time it and get in and out of this one? Absolutely. But here's what you have to know. The algorithm makes you 26% over 1,000 candles. That's a lot of work over 1,000 candles because it's 28 positions. You win 36% of the time. Your average win is 14. I still think that 65 is your 200-day right here. Remember how I said, I think I've been saying for months, 60 is your buy-in, below 60, sell over 60. I think this has moved to 65 because of that 200-day. So anything below 65, I think you get in. Anything above 65, if you want, sell. Personally, I'm holding on just because I think energy is still pretty safe. I like Devon. Oxy is the other one that I own. This is Warren Buffett's favorite one. I think this one's similar. Right here at 65, look at the 200-day. I think anything under 65, you buy in. Anything over 65, you get out. This one got you, you'd be out as far as the algorithm goes right now. Got you in at 63 here. 2 candles later, you get out with a 3% loss. The last one that you had, 61, was the buy-in, and you got out with a 13% gain. So you do have December 9th. You also have the ex-dividend date being paid. Viper Energy is one with a crazy, crazy-ass dividend. This is one you'd be out. You've got a gap down here between 29 and 28. You're trading at 31. I think you go back down there. So I do think that energy is moving negative just because it's been sold. It's made so many gains. Let's look at big energy players. CVX, personally don't own it. But you look at this kind of, button hook up here. This has been a crazy good trade, and you're still in this one. 148 was the buy-in on October 3rd. You're at 180. For a Dow component to move that, holy crap. I don't think you're coming down here to this gap, but you could. You just never know. Energy could, oil companies, the United States may say, hey, we're going to open up drilling to everybody. Boom, this one crashes. That's just it. XOM, same kind of thing. You're going to see this button hook up there. And it doesn't have you out, but this has been a great trade too. $88, and you're at 110. The 52-week high, I think, was like 114 up in this area, close to 115. So you're not too far off there, but the button hook's happening. I think you're seeing a clear shelf around $96 here. The 102 has a good shelf. Even the 110 is kind of building a shelf up there too. So I think energy has had its run. If you want to get out, I think you get out. Exxon in particular, you've had your ex-dividend date. You really just don't have any kind of catalyst that's moving on that one. So let's talk about scans. VRTX. I had this in my list. It's a biopharmaceutical company. It is an ARC hold. We had a buy-in here at 309.97. Now, what you have to know is this has been using the 200-day as its support level. The 200-day is at 293. I don't think the 309 is a crazy price to pay for this one. It's Vertex Pharmaceuticals, VRTX. When we go over to FinViz, the PE is 24, so it's expensive. This is up year-to-date 41%. It is only 1% below its 52-week high of 318. So if you're buying in on this cross-up, you're buying in at strength. It does have the ascending triangle, by the way. This is a part of TrendSpider's new, automatically putting in some new chart patterns, meaning that, hey, it's still a bullish run. As long as you stay above this bullish run, you should be able to see. You're kind of in that top, and the triangle is going to move so that it kind of cinches up. But if you break above this one, you can expect it to go more towards 52-week highs. It's a good stock. It's just expensive. Another one in the space might be UNH. We talk about UNH all the time. Anything below 500 on this one, I think you buy it all day long. It's super, super expensive. It's come down to 521. It doesn't have a buy. You're close to crossing up again. See that cross up? And you're coming up on the ex-dividend date. They already had their earnings. Their next earnings are on January 17th, so you're not looking for anything anytime soon. You can see it trades within a range. It's got a decent dividend, nothing too exciting, 1.28. It's up 2.62. Healthcare safe. If you think we're going into a recession, this type of healthcare is a safety. So I think I've given you enough. It's a Friday. Let me look at YouTube a little bit. Do I like TLT? Lawrence asks, TLT. You know, this is the 20-year treasury. Look at the chart. I mean, the chart just looks horrible. Your average win on my algorithm is 1.19. I think there's a better place to put your money. TLT to me, even let's go to the weekly. I mean, I think I've looked at this one in the past. Has it been a place to really put your money? Even with rising rates, just hasn't. It's nothing that I say, you know, it's super, super boring. I think people, you know, will rush to this one thinking that it's good. But look at that chart. There's nothing in this chart that tells me, hey, I want to buy this for the long term. It's probably going to get pushed up towards this 200-day at 139. But do you want to take that chance? Because I could have said, hey, here at, down here at 118, it's going to get pushed up to that 200-day. There's better places for your money, in my opinion. If you're going to look at TLT, I would probably just look at VOO. Just put it in the Vanguard S&P. Look at those two charts. Let's go to a weekly. Look at this chart versus the TLT. Why would I tell you to go into, TLT versus this one's been beaten down? And could you go down to this 200-day again at 335? Oh, yeah. You know, you hear people talk about 3,000. That's why you're hearing people talk about 3,000. There's still this gap down there. So I'd rather see you in there. TBT. Let's see what TBT is. This is Lehman's. You're seeing some good movement on that one. Yeah, let's look at the weekly on this one. I'm just not super, this is ultra short Lehman. This is short the TLT. You've been doing better. It definitely looks like it's overbought right now. You've got that kind of, even on the weekly, you got that button hook and you're kind of out and you're showing some weakness. But again, remember, my comfort level is in tech. It's in growth. Bonds have been boring to me. Fixed income, you've been losing money. I don't know too much about them. People have tried to steer me in there, but I haven't done much. Okay, podcast is done. I'll hang out a little bit more on YouTube. Thanks, you guys. Have a good weekend. Next week, I am driving one day. I don't know which, so sign up for the socials. I'll post it on Twitter. I'll post a short on YouTube, so have your alerts on YouTube. It's just easier, and if you get the alerts, it's no big deal. You just swipe past it. But have the alerts on YouTube so you know when I post a short. Instagram, I'll post it up there as well. So you got plenty of places to look. Join the Facebook private group. I'll try and post it in there as well. And if by the way, if I post it and you see it, just repost it in the private Facebook group for me. Come on, guys. It's a heavy lift for me to post it. I need some help. These shoulders are hurting. Take care, you guys. Have a good weekend. Okay. Export song to disk. Bum, 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 bum. I have a piece of popcorn or something stuck. Inverse always wins, Justin. It's not just Jim Cramer. Let me see. Okay. Portfolio check time. It's 9:53, so we've been open for about 20 minutes. My portfolio is up 0.13. I am underperforming the market by a lot. A lot.
and it's probably this right here. No, I guess not. It's probably the arcs and shit like that. But remember at the beginning of the podcast, I said under 40? Guess what's over 40 again? Anybody take this trade? Oh, by the way, I'm getting some alerts here too. Let's go over some of these alerts because I do have some. Wow, I'm showing some good confirmation here. It's outside the Bollinger Bands. It's going for quite a run. Let's look at the 5-minute. I floss 3 fucking times a day. I think I'm going to go out to floss again. Let's look at the 5-minute. You're outside the Bollinger Bands on the 5-minute. Wow. Let's look. I'm getting Russian people liking my stuff on Twitter. Let's see. Good call, FXI. Let's look at FXI. At 27. See, Justin, you do options. Kudos to you, man. I think you'll get that. I mean, look at yesterday. It was at 27. The options expire today or next Friday. Let me go into Anchor. Anybody else have any questions? I'm going to post this. Hopefully that was a decent podcast. I have a 1 o'clock call with available on 7 platforms. I have to see if I'm available on... I am available on Amazon Music. Okay, good. Episodes. Nobody listened to yesterday's afternoon podcast. We're going to do a new one. Anchor. We're going to push this over there. I'm going to quit GarageBand and save. Insert ad. It alerted me, by the way, that somebody commented from... do I like this one? I do like that one. We're going to put that one in. Let me look at Amazon for you. Amazon, I think anything under 100, honestly. I mean, it's shown some weakness. Yeah, on the 5-minute, I mean, you still have weakness. Let's look at the 5-day. It is funny because I talk about the 2 weeks that I traded without TrendSpider, and I was just using Active Trader Pro. And Amazon, see how it's been using. This is a 5-day chart, and it's a 5-day, 5-minute, so it's a little bit more active. But see, ever since it popped, I think that was around earnings time up here when they announced layoffs, I think. And it's been just kind of using that 200-day as its resistance level. And then this morning in pre-market, it kind of broke through there. But once it broke through there and the market opened, holy hell. That's algo trading in my mind right there. That's the algorithm saying, hey, at 9:30, I'm just going to sell Amazon. So it just lost everything it had. So now it's below the 200-day. I think you've still got some weakness. Let's go over to, I'll look at Safari. Look at Amazon. I'll hold Amazon. I think it's my number 1 or 2 holding. No, my number 2 or 3, I mean. Yeah. See on the algo here? It got you in at 96. I probably would wait closer to 90. The volume's kind of trending off. This is when the earnings happened and they announced, we're still spending a lot of money. This was where the layoff announcement happened, where it popped up here on November 10th. You're trading around 94, so you're still well above this gap. Oh, no problem, Mike. Have a great weekend, Mike. Hit me up if you need me. I'll be on my couch on Sunday. But yeah, Joe, I think my guess is if you hold out for, here's the thing. If you're adding to your longs today, Joe, I would probably target anything under 94 for Amazon. You might want to look at about, I'd look right in the middle of this candle. Anything in the 93 handle. If you're looking for your longs. Just don't be surprised if you get down here near 86. And here's what you have to worry a lot about with Amazon. Is even though they're cutting costs, look at the PE. It's just hard. I mean, Amazon, with that PE, their earnings per share this year are growing by 54. They're expected to grow by 83% next year. There is no way Amazon grows by 83% next year. No way. Not possible. So, this is where you could get hurt if we do get into a recession and people start actually pulling back on their Prime memberships. I don't know anybody who would pull back on their Prime membership, but Walmart's doing a good job. I mean, here's the thing. Think about it. You get Walmart, you get Paramount Plus for free. And you pay the same amount and you get things delivered from Walmart. I still don't like shopping on Walmart's app. Walmart doesn't have a very good app like Amazon have. Yeah, Joe, I kind of agree with you. I mean, 5 years from now, do I think that Amazon is fine? Yeah. I think you're going to be kicking yourself. Here, let's look at Amazon. Look at the weekly. I mean, look. You're back to what? 2020? COVID? I mean, do we think that Amazon hasn't grown from COVID? I mean, you basically gave, what they're saying here is that the COVID low, that Amazon, customers' behaviors have changed completely away from Amazon.
I don't think that's right. I think Amazon is still winning. But look at that weekly chart. They're giving Amazon no credit whatsoever. And if we pull it back, let's pull it back here. I mean, for shits and giggles, I'm going to pull it back here. Look at the volume. If you pull it back to here, which is July of 2017, look at the volume shelves. I mean, it's fairly clear. People are still holding. But look at how many people are holding up here at 150s. So, Joe, remember, I'm looking at it from simply a technical standpoint. And if you're looking at it from a technical standpoint, the long-term trend, this 200-day, is your guide. It's still up, but it's flattening out. The danger that you have is that this 50-day, if that 50-day crosses that 200-day, it's a super, super bearish signal. And so I don't want to talk you out of buying, because look at how low the MACD is. Look at the RSI. It's at 37. Could it go lower? Probably. I mean, look at the earnings. 28 cents per share. We go back here, October 2018. This was where they started tightening. It looks very similar to this. So are you going to see this? Or are you going to see more down? Yeah. I think what's my average purchase price on Amazon? Let's see. Am I in the red yet? Because the market's going down. Yeah, I am in the red. I'm down 0.3. Let's see. My average purchase price. I have Amazon in 3 accounts. I'll just look at the one that I know. Where I think I bought it originally. I bought it in 2019. I traded this one all the way up. But I bought it in 2019 at $85 per share. So I'm not way up on it. Now I've made that full round trip. So, but I do hold quite a bit. Quite a bit. Ugh. Okay, I'm going to put you on Active Trader Pro. But you know who's happy, by the way? I think Michelle's still happy, let's say. You're 160. I think this is a good buy. Oh, look at this. On today's candle, Target got you out. But that's just because the moving averages moved. But let's look at a weekly on this. Yeah. Look at Target's weekly. You're right at the 200 day. Here's COVID for Target. By the way, we just looked at it for Amazon. Here's COVID for Target. Right about 100. But Target's PE is 18. So they're not as expensive as Amazon. They're not growing like Amazon, but they're not as expensive either. Let's see where Boyle took off to. TQQQ is in the negative. And Boyle. Boom, boom, boom. Still going. I like Target for long term. I like Target long term. Here's what you have to know, and this is the danger. I think Target's management is good. The guy, Brian, who's their CEO, I like him. I think he's got a good head on his shoulders. He's getting a lot of complaints from Wall Street because he just hasn't managed the crisis well. Here's what I want you to do, Joe. Before you buy Target, walk into the Target store. If you like what you see, buy it. If you've been there recently, use that experience as your guide. I would say use your own personal guide. At this point, I would say use your own personal guide and take a look at your last 3 months' purchases and you and your family. If you bought more Amazon or more products from Target or did more shopping in either place, that's the stock that I would buy. Use your own personal guide as to where you're going. Because I think the markets can tell you stuff. I just don't know that the markets are a good enough guide right now. Let's go over to Anchor. Create episode. We're going to go. What am I going to name this? Oh, man, I forgot Cooper. Cooper, I forgot you. I need to write you. Oh, why did I forget that? I need to alert Cooper. Where is Cooper? There's Cooper. The note was on there. ZI. Okay. I forgot to go over. Yeah. Starbucks isn't a bad buy. I'm telling you, Starbucks is a good one. I got my dad out of Starbucks, and I regret it. I shouldn't have gotten him out of there. Let's see. China. Market update. Oh. Beer. Market update 11/18/22. I didn't even go over EQT. I need to add that to my thing too. Why don't I do this stuff? Let's see. Trend Spider. We're going to go over here. Episodes. We're going to copy.
to put the support up here. Guys, I may take next week off. I may lose a bunch of Twitter is a mess. ETHE. DraftKings. We're gonna do Penn. What's Penn National? PNN. Peen. Beef and butthead. Peen. Las Vegas Sands. MGM. Yeah, let's see. FXI. Baba. KWeb. JD. PDD. CALX. Google. SOXS. Ford. XLE. Sedge. And Enphase. We're going to put these. Energy. COP. Yeah, energy and oil's bloody today. And Robert, you may have joined late. I went over the XLE. It's kind of turning over. And it's interesting because I think, there we go, publish now. Yeah, Sands, I think Sands has Macau. I forget which stock has more Macau exposure. But Twitter is a mess. Jim Cramer is railing against crypto. We're bullish crypto. XLE, it just looks like it's crossing over. I kind of told people on the podcast, you have your choice. You can get in, or you can get out. But it does look like it's a little downside. There are ex-dividend dates coming up for two that I own, Devon and Oxy. So you do want to be careful there. And we're going to X tweet. We'll tweet that one. Then we'll tweet another one. Macau's big, man. What is it? 3 times the size of Vegas from a revenue standpoint. That's what's crazy. PXD scans, and then I'm gonna put in SPY. Let's move this over here. SOXL, XOSS, Tesla. Tesla's a big mover down. Oh, you got 170. PXMD, ARDX, AMD, Amazon, Apple, Neo, FXI. Oh, I did FXI in the last one. NVIDIA. I gotta get rid of 2. 1, 2. There we Yes, Joe, I do. There is dividend by X date. Let me see. ETF that only goes after dividend X date. There is understanding mutual fund. Let me see. Is there an ETF that only maybe it's at this Investopedia article. Paid in cash, dividend taxes on ETFs. Vanguard dividend appreciation, the iShares Select dividend. I had PFF, by the way. I owned PFF for a very long time. Yeah, I guess it doesn't have this. There are ETFs out there. There are ETFs out there that track, basically it will buy a stock on the ex-dividend date and then sell that stock past its ex-dividend date and buy another stock that goes into its ex-dividend date. It has been shown to not be a great strategy. And remember why? Because when the ex-dividend date happens, let me just look real quick. Let me see. Profile. 19 hours ago. Let me see the traffic. That's why. I only had 1,000 impressions on Twitter yesterday. And nobody listened. Let's see. Who commented on this one? Oh, Tom did. Let's see. We'll go back. Here's a good example. Zim is a famous one for paying huge dividends. And see the ex-dividend date right here. So that ex-dividend date would have bought here, sold here, and it collects the $3 in dividend, but it loses it on the sale. And typically what happens with a stock when they pay a big dividend is their stock continues to fall because you're not reinvesting in your business. You're basically paying it out to shareholders. So, and I got to go for my daily walk because I have a 1 o'clock meeting with TrendSpider I've got to get to. But, yeah. There are ETFs out there. I know there are. I just, for some reason, can't find it. But look at Boyle. It reached 41 on that run. Market's kind of gotten beaten down a little bit, specifically the high volume names. But you know what's kind of making a comeback? It's like LL Cool J. Look at that. You're up at $9 on UVixie. Oh, I'm not even showing you. You heard about the Macau? I'm just not touching anything on a Friday. Okay. I think I am going to stop the YouTube live now. I'm going to go get my day started. It's 10:30. Okay. Pine. Let's look at Pine. Pine. Alpine Income Property Trust. It's up 2%. Let's go back to Safari. Property Trust usually pays a shit ton of dividends. Wow. That is doing well. So you got too far away from that 200 day. And here's the golden cross with the 50-day crossing up. Didn't support it last time, but maybe it will this time. Let's look at Pine here. PE 750, so it's not expensive. Down only 7% year to date. 52-week high is 21. Definitely trades within a range. They're expected to lose 108% of their revenue next year, earnings per share. This year it's up 692%. There's something wrong with that, but it pays a 5.95% dividend. January, Truist said $20. Let's see. Let's see. They're saying insider interest in the company. You guys can't see this. Let me move this over. Here over here on the right-hand side. It is. There's a ton of buying. September, October. I mean, it's, thousands. It's not hundreds of millions of dollars. But $30,000, $40,000. Tamaco Land Company, 10% owner. That's who's buying the shares, is Tamaco Land Company. Is buying tens of thousands of shares each time. Move this out a little bit. Algorithm on this one loses you 3%. Buying and holding makes you 21%. Your average win's 5 points, 5.79. There's better stocks out there with more volatility. I still think PANW. See how it's touching it's a red candle today. It's down from where it opened up. But if we close above 169 on the morning candle, we're at 168 right now, but if you close above 169, I think you've got some support on that 200 day. But okay, I'm out. Have a great weekend, guys. If you need anything, hit me up. I'm here.